Hi everybody, Brian Shannon here from Alphatrends.net. Today's Friday, the 14th of November, 2014. Let's go ahead and take a look at the closing numbers for the week. Equities continue to move higher. NASDAQ saw the best performance, up 1.6%, led by the semiconductors, were up about 1.5%, and the financials were down 1/4 percentage point. Oil, despite a nearly close to 2% rally today, still closed the week down 3%, and gold did finish with a little bit of a gain. So let's go ahead and take a look at the charts here and make sense of this action. The S&P 500 remains clearly in a strong uptrend. Some people will say, but we were down on big volume and up on light volume, and I would say only price pays, so don't worry about the volume. Worry about price action and managing risk. You can't set stops based on volume. If you do, it's not going to help you. You set your stops based on price action. And for the S&P 500, we obviously continue to be above this rising 5-day moving average. Now we've started to cross back and forth above and below it just a little bit, which indicates to me, when we look here at the 10-minute time frame to see that a little bit more closely, that we're starting to see just a slowdown in the rate of ascent. No breakdown yet. This market is not in a downtrend on any time frame here. We're looking at the 10-minute time frame, and here this 5-day moving average is still advancing. We closed above it today, and I think if we get back below 203, 203.25 next week, and we stay below a declining 5-day moving average, then there's likely to be a little bit more of a pullback to the downside in the S&P 500. So what we would want to see is a break of that support, then see it hold as resistance and continue lower. Then we could possibly see maybe a pullback even down towards the prior high here at about 202 basically. But again, the market remains in an uptrend. If you're trying to sell it short, for 1 day at a time, perhaps you can find little scalp trades, but it really continues to frustrate the short sellers, and there's no reason technically to be short this market. The NASDAQ was up 32 cents today, and again, that was the stronger market this week, and it's good to see that it actually had taken out some resistance here. We were looking at that 102 level last week as where we had this resistance and our important support down at about between 100.5 and 102. But now that we've broken beyond that resistance, we'll look for that to become support next week. And what we want to see is that basically 102 is where we hold support for next week. If we continue to hold above that, the buyers remain in control. It's innocent until proven guilty. And if you're trying to sell short, again, it should only be so for only the very shortest periods of time. The Russell 2000 was down 21 cents today. And for the week, again, that was, where were we for the Russell? We were up, we were basically break even. We were up 0.07%. And you can see we're closing below that 5-day moving average. Now, the close below the 5-day moving average doesn't mean we're breaking down. What we need to see for us to be considering this market intermediate term downtrend and guilty till proven innocent is a pattern of lower highs and lower lows below a flat to declining 5-day moving average. And right now, all we have is the flat moving average right now, and we have a lower low, but we don't have, what we want to see is lower high and lower low if we're looking for the short. And right now, of course, there's no evidence of that. Where I think we want to pay more attention to the possibility of downside next week would be really, we've got this bigger band of support down here, 115.25 to 115.5. The one disturbing thing, I guess you could read into the Russell 2000, I wouldn't say disturbing, but the one caution sign would be that we broke out to a new high and then pulled back. And as we know, a lot of times from a failed breakout will come a fast move lower. But I don't think real trouble begins until we break this bigger support level. So, and even there, you're looking at this daily chart, we've got a market that's into this prior band of resistance. And if we get a pullback, maybe it comes down towards about 114.5-ish. But again, we're, the buyers are still in control here in all of these markets. The semiconductors did manage to break higher. They're basically, if you look at it on a 10-minute time frame, we can see that we've had this little band of resistance between 52.15 and really 52.25, 52.30, and our band of support recently has been down really 51 to 51.20. So we're at the top end of the range, of course, and we are in a primary uptrend, so odds continue favoring the upside. But if we see this market break back down, we'll just be back into this range into here. The bigger key support level is down at about 51. So even if we break down next week in towards 51, it doesn't look like an aggressive sell to me. The financials are probably the weakest group here, and we saw again that the financials this week were down 0.25%. So they are the weak, the underperformer here, and they are below a flat to declining 5-day moving average. As I told subscribers, if you wanted to be short these financials with a stop above Thursday's high, that would make sense, because yesterday we saw the lower low and today we have the lower high. So we've got a pattern here, a very small pattern so far of lower highs and lower lows. And if it's, for right now, I'd say that it's guilty till proven innocent on the intermediate term, neutral at best right now, and that would only change if we get back above 24.25. So the financials are one group that is looking like maybe a little bit further pullback, but with such a strong uptrend on the daily time frame, I wouldn't be expecting a big trade on the downside, perhaps down into this band of support, 23.77 to about 23.85. That's really the way it's looking right now. So let's take a look at some of these other markets. We'll look at Apple first, actually. Apple consolidated in a tight range last week and broke out once again this week, so continues to show the path of least resistance is higher there. Anyone who's selling this short is getting really what they deserve, but we've got higher highs and higher lows even on the 10-minute time frame, so there's clearly no reason to be short, and manage risk if you're in that position. We had spoken last week also about, well, let's take a look first at gold. Gold we spoke about, and I was comparing the possibility of a trend. And, people got excited today because gold was up 2.5%. But really, I mean, look, how excited can you be about a 2.5% day when we've got this clear downtrend on the longer term time frame? Now, you can see that we are trying to stabilize at the 61.8% and retracement level. And as I said last week, the Russell 2000, we were bearish on that 4 weeks ago or so as it was breaking down, turned back to neutral, and then positive as it got back above the prior support. And at that point we were saying, this is a failed breakdown, a bear trap. Now the most bullish scenario, as I outlined last week for gold, is that perhaps we see this market get back above 115 to 116, because then that would say this might be a failed breakdown, and from a failed breakdown often we see a fast move in the other direction that is higher. I still think that structurally gold is in a primary downtrend. It's going to take a lot to change that, but if you're involved in gold, then you had a good day in it. If you bought it anywhere below this line, I would say it would be foolish to lose money in it. So set your stop to break even or somewhere around that level if you're involved in it. But again, I don't like the odds for it, not with all these declining moving averages. The dollar did finish with a gain this week as well. Today we saw it gap up and then pull back, and of course a lot of times gold and the dollar go in opposite directions, but you trade gold based on what gold is doing, you trade oil based on what oil's doing, etc. And here we see the support of 23.20. Next week, if we break that, maybe we see a little bit deeper pullback, but we're in a primary uptrend here as well. Bonds were up 58 cents, and they continue to just kind of meander in here. Maybe above 120 they can get going once again. We've got this little band of resistance, but nothing to get excited about, and nothing really, I don't think, to be worried about with bonds. If they break below maybe 118, there would maybe be a little bit of an issue. Last week we spoke about Taser, and I was saying that we've got a big short position in this stock, and somewhere up near above 19 bucks a share would be a place to consider a purchase. It had a couple choppy up days and pulled back on Thursday to the rising 5-day moving average, and found support. Today it had a nice day, and I think that, I'm going to say again, I think that this stock has really big upside potential. I'm not going to let that opinion get in the way of trading and in that, but if you look at their fundamentals, they're selling more stuff, they're making more money, they've got a big short position in it. The shorts have added to their position in the last period, and not many of them, if any at all, are in a profitable position. And we look at the monthly chart, you can see getting back above the year highs here of, I think it's 2086, but somewhere up above there, I think we could start to see the shorts really get into trouble. Now, if you're involved, I would say that your stop goes probably about $19.20 a share. I'm involved only through call options. I've got some December 20s, and that's going to give me the time I think I need for this move to play out. Not necessarily all the way, but if you look at this, it actually, I was telling subscribers, it reminds me a lot of Tesla when it was down near about $40 a share a year and a half ago. Anyways, it's just a trade idea. If you're involved in it, manage risk. If not, look for the entry that makes sense on your time frame. We also spoke about Plug. I said I wasn't thrilled about it, but it would be mainly because, or one of the main reasons was because the volume weighted average price year to date was just above, and I think I was influenced into talking about this because I had a number of questions about it. But really, if you look at it, it got going a little bit in here. We were looking for a pullback and then continuation. It pulled back and then failed and got below that declining 5-day moving average before the earnings came out. There was no reason to be involved, and now Plug is, once again, you have to understand the personality of the stock. The stock has big moves, and these big moves fail a lot, and that's what this stock continues to do. It trades really kind of like a biotech stock. I think a good name to keep an eye on for next week might be LinkedIn. LinkedIn gapped up a couple weeks ago, and if we take a look at the volume weighted average price since that event, here we can see that it's really right at about 230. We've also got the stock above a rising 5-day moving average, and probably clearing the highs of this week should be able to continue to see the stock move higher, perhaps towards all-time highs on this weekly chart for LinkedIn. So if you get involved in the stock, your worst case stop in my mind should go down at about 228.5 or so, maybe even up as high as 232. Where you decide to put your stop is completely up to you. I always say to people, make the trade your own, understand the analysis. So if it makes sense to you, then you should go for it. If not, then sit on the sidelines and cash. It's not going to hurt you. But anyways, I hope it was a good week of trading for everyone, and you have a good weekend. I will talk to you next week. Thanks.